I remember the first time I thought seriously about investing. I was sitting at my kitchen table, staring at a pile of bills and thinking about the future. Have you ever had one of those moments where you realize you need to do something different with your money, but you're not quite sure what? That was me. I knew investing was a key to building wealth, but it felt like stepping into a foreign land where everyone else knew the language, and I was just trying to decipher the menu. So let's break this down together and make it less mystifying. Imagine investing like planting a tree. You start with a tiny seed, which is your initial investment. At first, it might not look like much, and that's okay. Trees, like investments, need time to grow. They need sunlight, water, and the right conditions. In the world of money, these conditions are your understanding, patience, and a little bit of guidance. First, let's talk about the different types of seeds you can plant. Stocks, bonds, mutual funds, and ETFs are like different types of trees. Stocks are owning a piece of a company, like having a share in a big apple orchard. Bonds are more like lending your money with the promise of getting paid back later with interest, much like a sturdy oak that grows slowly but surely. Mutual funds and ETFs are collections of stocks and bonds, like a diverse forest that spreads risk by not relying on a single type of tree. Think of the financial market as a bustling city market, full of energy and constant change. Prices go up and down all the time, just like the weather can shift. And here's where emotions like fear and greed can creep in. Fear is like a sudden storm cloud, causing panic and the urge to sell everything. Greed is like over sunlight, urging you to plant too many seeds too quickly without thinking. The key is to stay calm and remember that trees, like investments, grow over years, not days. Now let's get personal. Imagine you've planted your apple tree. It's growing, slowly but surely, and you're proud of the progress. One day, a friend tells you about their new cherry orchard that's growing faster. Suddenly, you're anxious, wondering if you've planted the wrong tree. This is where financial psychology plays a huge role. It's important to remember why you started planting in the first place, for your own goals, not someone else's cherries. Everyone's financial journey is unique, and comparison can lead to rash decisions. In investing, as in life, it's crucial to manage risks. It's like tending to your garden with a careful hand, ensuring that no single tree dominates your entire plot. Diversification, which means spreading your investments across different types, helps protect against storms. It's the wisdom of not putting all your eggs, or apples for that matter, in one basket. Here's the truth, though. There will be bumps along the road. There will be years when the harvest isn't as bountiful as you'd hoped. This is where resilience comes in. Remember, every seasoned investor has weathered difficult seasons. It's about holding steady, learning from each experience, and continuing to nurture your trees. So as we wrap up our chat tonight, think about what kind of financial garden you want to grow. Whether it's a small, sturdy grove or a broad, diverse forest, it starts with that first seed. Investing isn't about getting rich quick. It's about creating a sustainable future and taking ownership of your financial destiny. Reflect on your goals, your tolerance for risk, and your timeline. Picture that future tree, tall and strong, providing shade and fruit for years to come. Investing is as much a journey of patience and discipline as it is of strategy, a journey well worth embarking on.